Hello there, my friends. Chris Marcus here with you on Monday, July 17th, 2017. Hope everybody had a great weekend. And before we dig into today's video of what you actually can do given the situation we're in, sure, we talk about silver manipulation and Ponzi scheme, stock markets all the time. Um, Although before we get into that and really giving you a few thoughts about, well, what are the options that are out there, just a quick thank you to everybody who's been watching and commenting and see our subscribers growing every day. And it's nice to think that we're building a community, see people interacting with the comments to each other. And when I started this, I kind of didn't really know exactly what form it would take on, but for bringing people together so at least you can begin to form a community and have other people to talk to and work some of these things out with, well, that's exciting to see. So thank you for everyone who's been contributing and enjoying the videos. I've been having a lot of fun making them. So anyway, with that said, let's get on to the real stuff. Enough of the promos. About a week or so ago, I was talking to a cousin of mine who leads normal life, has a certain amount of money that she wanted to know how to invest, and certainly she's been hearing me talk about the problems in our economic system and gold and silver for 6 or 7 years now. And so she said, Chris, what can I actually do? I have this money. I want to make sure it's there. How do I invest this wisely? Of course, silver comes to mind as one of the primary options, but to that degree that silver is an incredibly volatile asset where I think there's an extremely high probability that at some point in our medium and hopefully near-term future, we will see silver trading multiples higher of where it is right now. At the same time, it's a volatile asset. So maybe taking everything you have and putting it into silver maybe might be a little bit risky. So it comes back to, well, what really are the safe options if you want to be somewhat responsible, take your money, make sure it's there, and you're investing it wisely? What can you do? Well, we do have a few options listed, so as a little hook to keep you watching here. But before getting into that, again, by all means, I'm a former trader, then got really interested in economics and seeing how some of the bigger picture things work and combining the two. With that said, I am not your licensed financial advisor. If you do actually need someone who is a licensed broker, I can recommend actually when my mom was ready to do some investing in some mining stocks, where I sent her, which is Rick Rule's shop, which is part of Sprott Global now. And if you need help getting in contact with them, leave a message. That's where I put Ma's money. So I think they're great at what they do. I, on the other hand, am not giving you specific advice because I haven't met you. The Gestapo still calls that illegal. So instead, what I'll do is share, again, a perspective that you can think of me maybe as an educator might be more appropriate. But I think part of what's important is for people to understand what's actually going on. So at least, so you don't feel, and one of the things my cousin mentioned is that she doesn't know who to trust. And I can understand that. For a long time, I didn't know who to trust, and eventually started really seeking out answers on my own and double-checking a lot of the things that I've been told growing up, which turned out to not be necessarily how things work. But what I've always felt could be helpful is pointing things out that people probably haven't seen, the same types of things that when I was sitting on a trading floor in 2009, and had gotten blindsided by the housing bubble like most others, every once in a while I have a good idea come through. And at least I figured, well, the guys who did see this coming, what is it that they saw? Bernanke, the Fed, the banks all talked about how it was a perfect storm that no one could have predicted. And certainly if you've seen the movie The Big Short, or for those of you who are familiar with Austrian economics, which is basically just exposing this ridiculous idea that the Fed comes along and determines what price everything should be. Worked out about as well as Nixon. And it's funny, I actually read Dick Cheney's autobiography for a couple of years ago. Thought it'd be amusing, and it was. And when he talks about him, and I believe Donald Rumsfeld was in the room when Nixon decided to do the price controls, and you had a bunch of middle-aged political white chain-smoking cigarette guys in the room deciding. And Cheney actually describes how they were making deals saying toupees can go up 3%, and someone would counter with the price of dill pickles, and shockingly, that didn't work out too well. Although perhaps what's even more shocking is that Cheney admitted at the end of that chapter that the government should stay out of trying to set prices, which that part I'd actually agree with. Wish that happened, but in either case, we're in this environment where economy's weak. Fed says they're going to raise interest rates, or lower interest rates. If it's strong, theoretically, they're going to raise interest rates, which, if you really had to boil it down to one simple factor that causes these bubbles, I remember up until really reading the folks who'd seen the housing crisis in advance back in 2009, there was something about it that never seemed to add up. And fortunately, it can actually be really simple when you stop taking CNBC or the Wall Street Journal too seriously and just think about the mechanics of some of these things. Because before you can get into what is the answer, well, there's the consensus mainstream Wall Street government view that we've been presented with for so long that tells you to just leave your money in a stock fund that matches the economy and that there's no way to really beat the market. I would argue that that's not completely valid. And again, I remember reading an article from Casey Research. They showed if you had the stunning amount, I don't remember what the percent return was, but rather than leaving your money in the market, if you had just understood what has to happen when interest rates are raised or lowered by the Fed, which again, you can think of lowering interest rates as printing more money, and those rare occasions where they actually raise interest rates as somewhat unwinding the money. So if you just understood what the Fed was doing, and whenever they were lowering interest rates, bought precious metals, or when they were raising interest rates, sold it, and then entered the market, and understanding the impact that all this money has, similar to how following the collapse of, you may have heard of a hedge fund called Long-Term Capital Management. It had some troubles back in the late 90s. And following that, interest rates were lowered. You had a lot of money coming in. You had the excitement of the dot-com bubble at the same time. So again, you can't have the bubbles without the printed money, because if there's a finite amount of money, if one thing goes up, then fine, you can bid it up, but the money has to come from somewhere else, which forces choices, which is, in my opinion, the market's natural way of regulating these things. Now, again, whether it's a dot-com bubble or, remember after that collapse, what did Greenspan do? Took interest rates again lower, which meant a lot of new money was coming in, and a lot of it went into the real estate market. And then, of course, when he started to raise interest rates, that bubble collapsed. So now we're seeing a similar period or a similar phase. We're following the collapse of the last bubble. What did they do? They printed a ton more money. And shockingly enough, stock, bond, real estate markets all at record highs, which in my opinion is more of feeding the next bubble rather than true economic growth. Because if it was really true economic growth, why is the printed money, why are interest rates still at 1%? We were told this was temporary. We're 8 years later. Why is the balance sheet still $4 trillion or whatever it's at now? And we're always told how, well, we might unwind it sooner as the years tick by. So without getting into a whole host of things about this Federal Reserve contraption argument that we've covered before. And if you have questions, leave them below and we can make that into a future video. But, it comes down to, do you believe in the Federal Reserve? Do you believe that Congress is ever going to stop spending? Because keep in mind, you hear about this debt ceiling limit, which is supposed to say, all right, this is how much we can borrow. At some point, you have to get things in check. What happens every time the limit comes up? They just raise it. We're at 20 trillion of public debt. Keep in mind that was 10 trillion, I think, before Obama came into office, which is always ironic because there's that famous clip of him bashing George Bush when he was still a senator, saying how when Bush came in office, the debt was 5 trillion and he doubled it by the time he left. And then Obama doubled that by the time he left. And of course, this 20 trillion number doesn't even count what's owed to Social Security or Medicare. Which again, keep in mind that if Congress followed the same the GAAP accounting principles that they grilled Enron or, that were violated in that situation, Congress would be in violations of its own rules if they followed them. They just decided to consider themselves exempt. And when you count in that money that isn't put on the balance sheet, we hear the number. I don't think anyone really knows for sure, but even I remember this was a couple years ago, the Congressional Budget Office had even put the number as high as 85 trillion. I can't even imagine how high it's gone since then. But at some point, you start adding these things up, and to me, it seems like we've passed a point of no return, which leaves you with two choices. You have the traditional Wall Street framework, which has you picking stocks or bonds. Keep in mind, both the stock and bond markets are at all-time highs. And again, based on what I just spent the last 12 minutes talking about, I would certainly see as a bubble. Now, it's a tricky question. When does the bubble pop, and when do you see change in some of these things? That's the tricky part. Even the folks that saw that the housing market had become a bubble didn't quite know when. So, but on some level, because if you think that Trump is going to come in or Hillary's going to come back or somehow there's a legitimate way that this system works, well, then by nature, you're probably not, the suggestions I can give you aren't going to be as helpful because they're based on an entirely different scenario. And I think that's the challenging part of this, because we've been conditioned growing up 70s, 80s, 90s, in the last decade to have a very specific mentality, which we saw back in 2008 got clobbered. So that leaves you with a choice. Do you continue going the conventional way, following the Fed and the same banks that have melted things down time and time again? Or if you choose to go and say, well, the guys who saw the last bubble in advance, what are they saying now? Which is very similar to what I've been talking about for these all these videos that we're making. And in that perspective, it's really that we're on borrowed time and this next bubble is going to collapse. And given that, what can you do? So, sorry for the long intro here. We'll try and make the rest a little bit quicker, but it's that important to understand because, again, I get it that, we're used to thinking which stocks should we pick, which fund should we pick, and then just hope for the best. But at least in my opinion, when I looked at what I saw and how this just seemingly has to collapse at some point, even though I missed the big rally, I'll be the first to admit I missed the big rally in stocks over the last, I guess it was since 2009, so 8 years. But I was willing to take that risk because I saw another asset in silver that, in a variety of measures, to me was undervalued. At some point, would necessarily almost have to go up higher, versus the stock market, which, yes, has tripled since then. And certainly if you were riding that, is great. Yet it's tricky to know when to get out of one of those bubbles. And if you can time that, then by all means, then please make a video, and I'd love to watch it. But that's the risk. And certainly this is an extreme. I mean, the fact that the market has tripled since then, I would argue, just shows the strength of the volume of how much money was printed. So it's gone on longer than I thought. Although even the fact that it's tripled based on some of the things we've talked about before, I still don't think that will come close to matching what we'll see with some of the precious metals, and especially silver, when the shoe finally drops. So if you're still here and thinking, all right, that makes sense. So if I do subscribe to that, what are some of the options? Again, silver, we've talked about. Gold. I personally like silver better for a variety of reasons that we're going to make a video about later this week. So you can just always hit the subscribe button and come back when that one's released, and we'll get into why silver over gold. Although I think gold will do extremely well. Now, another interesting one that we've talked about here, and I'm sure you've been hearing other people mention and talk about, is Bitcoin, where by all means that falls into the category of an all new level of volatility. Although, again, if we do reach this point where the bubble collapses, and it's what I believe will this time be the currencies that it's, because there's no, last time the Federal Reserve was able to bail everything out, but it's almost like at this time, who's going to bail the Federal Reserve out, which is really leading to a crisis in the currency. You print so many dollars, and eventually when we reach that point where people say, I want real assets, whether it's silver or gold, or looking at the cryptocurrencies as an alternative form of currency, with one of the advantages being that it's not up to some group of bankers or individual folks to decide we want it to be this or that. It's based on a code that people have access to that, at least as far as I'm aware so far, can't be manipulated in the same way that some of these other ones are. So if you think that we're going to hit a problem with the dollar, in that case, Bitcoin and some of the other currencies can be something to look at. Again, it does get very volatile, so you want to do a little homework before you get into those. But, again, it's one of those things where if you think that Trump is going to come along and fix things, then maybe Bitcoin not the best option for you. But if you think we're going to have problems with the currency, then what are currencies that a lot of people are turning to that have advantages over the current system? So that gives you the cryptocurrencies as an option. Next on the list, this is one that I really like because I think it often gets overlooked, where we're trained to think stock market, maybe the bond market for some people yet. Another way to handle this situation is think about, well, you have some idea that the world's going to change. It would seem like at some point this banking sector is going to be restructured. So what are the businesses that are positioned to be stronger going forward? So, for example, I've been thinking a lot about different companies that are using cryptocurrencies as part of their business model, as opposed to maybe a traditional bank. Or if you find someone maybe that, again, I hear there's always questions about the viability of our water infrastructure. So in an environment like that, if people are really going for the things that are the staples and the necessities, which water is obviously one. Again, you have a lot of value in the resource markets, and it can be anything aside from that. But if you just, if you're walking around and noticing, someone who seems to be making sense, and they have, well, this is how we see the future going, this is where our business capitalizes on that. There's a lot of benefit It doesn't have to be just some corporation, but there are a lot of people that are out there trying to find solutions to the things that are happening and usually need capital. So just being on the lookout, whether it's maybe you have a friend who has a business or there's something that you've always just thought made a lot of sense. It doesn't always have to be a stock. So now that could also be next on the list is creating your own business, investing in yourself or getting further education. Again, taking what you see is going to happen and rather, because when you're buying a stock, you're essentially saying, I like their business model. I'm going to give my capital to them because I'm going to be a part owner in the company. I think they're going to run it well. There's going to be profitability, and I'm going to benefit from that. But it doesn't have to be somebody else running the company or a public company. It can be someone you know. If you have a great idea that you think, well, given where we are, this is what I'm looking at, and especially the things that I expect to happen work in favor of this business plan, then it could be a great time to invest in a business. That was the choice that I was faced with. I was working as an options trader on Wall Street, and I saw these things happening that I thought at some point, this to me seemed like this whole thing wasn't going to be around. And certainly I found the whole entrepreneurial journey to be a little easier at some times than others, although still my thinking was, what are the things that I like to do that are of value that can help going forward? How can I use those skills? Obviously, that's part of the reason why I'm doing this channel, to share what I've learned so that hopefully people don't have to go through that same experience that they did in the previous bubbles. But just again, thinking about what you like to do, the opportunities you see, and opening the ways to invest beyond just thinking, well, I have to buy stocks, which are at an all-time high. Again, we mentioned education in there. Certainly, if you can build your education, that puts you on track to do something that, in what I believe will be a newer and different world, again, these are other ways that you're taking your money and you're investing it. Certainly growing up in the East Coast, the whole concept of doing anything entrepreneurial or starting a business for yourself, I don't remember ever hearing much about that. I was just felt, get good grades, go to school, go to college, go work. So a lot of these things I've learned in the past couple of years were new, but they are learnable skills. Some things are not for everyone. So again, that comes down to what you really see yourself doing and what you see happening. But just opening up another possibility. And the last one, a little bit of a tricky one, because I think we do have a real estate bubble. I mean, the levels are well past where they were in even 2007 before things collapsed. So I don't feel it's the best time to be buying real estate, with perhaps the exception of, if you find just the right home that you imagine you're going to be living there for the next 30 years, raising a family, and you take out a 30-year mortgage and you're 5, 10, you're paying back in cheap dollars that have been devalued after the Fed has its QE 6, 7, 8, and 9, then there can be an argument where at least you're owning something real that has value that you'll always be able to use. So again, if you have any questions about the real estate, leave those below, and perhaps we can talk more about that later this week. But in either case, hopefully this gives you a few things to think about in terms of, you've heard stock market a bubble, bond market a bubble, real estate market a bubble, which I think that they are. I think you can clearly support that they are, yet so that takes away a lot of the traditional options, but there's always other things you can do. And hopefully today's video helped give you a couple of ideas. Again, don't feel like you have to figure it out today. Sometimes the way our mind works, we hear suggestions, think about things, we set our goals really at X point in time. What do you want life to look like? What is it you want to accomplish? But again, just the fact that you're watching and learning things like this, I think will serve you well no matter what happens. Excuse me. So with that said, we're going to wrap up for today, but leave your comments below. I do get to answer most of them. I'm getting a lot of great feedback, and I think helping to answer the questions so that what you're hearing in these videos sinks in and can be of use. So with that said, a little bit of a longer video today, but thanks for hanging in there. Hit the subscribe button, and we will see you again tomorrow.